Hey guys, it's Crossroads here. Two big changes with Bitmine over the last week or so that had SEC filings related to it. One is the share count expanding to 50 billion, and the second, the CFO is leaving. We're going to talk about whether these are causes for concerns or not. This can be a short video, but I want to give you my opinion on it as well. So let's take a look. So here is the SEC filing. Let me blow that up a little bit. And so this was from or December 8th, this proposal from the board. And so they were looking to increase the share count from the proposed maximum of 500 million or 500 million to 50 billion. A little bit of an increase there. Now, this amount right here, a lot of people looked at that and were like, wait a minute, what is going on? Because, if it was like 5 billion, it's like, well, okay, that's still a 10x increase, but it's still quite a bit. There are companies out there that have shares outstanding on that order. 50 billion is a lot. So case in point, NVIDIA, I believe, is around 25 billion shares, and Apple is around 15 billion. Max authorized is a little bit higher than that as well. But this is a little bit different. Now, there's a couple of things going on. One is with the digital asset treasury, your shares are your ammo. It's basically at the premium that you sell above what the assets are, the MNAV. That's what you're able to offer to shareholders because you're selling shares, you're buying back undervalued and underappreciated Ethereum and other assets as well. And over time, that'll appreciate. Basically, it helps you as a shareholder accumulate more ETH per share. That's one of the measures to be looking at with Bitmine. But do they need 50 billion shares to get to that 5% of the Ethereum network? Probably not. Now, they do say here, they talk about the reasons here. They said that it's because best interest of the company. They'll always say something like that. But it says the authorization of additional shares of common stock will allow the company to explore opportunities for strategic transactions that could result in the issuance of common stock, including equity capital raises as they rise or the company's need to require. In addition, the company has an at-the-market offering program in place, pursuant from which time to time it may offer to sell common stock. So that is bottom line of the reason. They did mention that there's some risks, and they talked about dilution. And they also said, like, hey, if they need to poison pill themselves, that's what the anti-takeover provision is. If somebody's trying to do a hostile takeover, they can poison pill themselves, and they would use this as a last recourse. But they noted they're not aware of any attempt to that. They're just saying, hey, in case that happens, rather than seek additional approval, they can go ahead and have this done. Now, this is a proposal here, a recommendation from the board. So bottom line is they want to have all the ammo they need to do whatever they want to do in the future, rather than go each and every time and ask shareholders for approval. But one of the big reasons for this is that the NASDAQ, maybe 5 or 6 months ago, was pushing back against a lot of the companies that were beginning to buy and hold crypto on their balance sheet without explicit shareholder approval. Now, for Bitmine, they are not on the NASDAQ. They're on the Amex New York Stock Exchange. So not even the New York Stock Exchange, the full one. So they wouldn't come under this ruling. But I imagine at some point in the future, Bitmine is going to want to jump into the NASDAQ. And so this basically gives them explicit shareholder approval to be able to use this without needing to seek additional authorizations. So that's something that won't prevent them from getting into the NASDAQ, and it won't really be a cause of concern once it's approved as well. And of course, the flexibility out there. You never really know what's going to happen and what the future is like. So they want to line up the ammo. Now, I would be concerned if they had a history of diluting. And by diluting, I don't mean selling and issuing more shares, because that's what they're doing. I mean, if they were selling under their MNAV value, that they were like saying, okay, the stock is under value relative to the net assets that were on the balance sheet, I would be very concerned, because I'd be like, okay, they can do a whole lot of that. And yeah, it'll probably work out with Ethereum, but at that point, why not just buy Ethereum? Since they've not been doing that, I'm completely fine with it. I'm in favor of this. I'm not really concerned. Now, what's a little bit more interesting as well, and probably got even more attention, although it didn't quite get the clicks from the headline, is the filing from the 15th here. So let me blow this up as well. So this is an 8K, and right there noted as of December 11th. But this is a statement that says that the CFO is leaving. Now, we knew and expected when Bitmine made this transition to the digital asset treasury that the CEO would be leaving, and he left. and they brought in a new CEO. But the CFO, that's a little bit of a surprise. So Mr. Mao or Mo, I'm not sure which way it's pronounced, is leaving. This details those terms. They also said that this is not because of any like bad blood or anything like that. They just agreed to part ways, and so there's a lump severance sum, some equity as well that he's being given. Now, a lot of times when a CFO leaves, that actually gets more attention than the CEO, unless it's the founder itself that was a CEO. Some always have concerns whenever a CFO leaves, no matter what company it is. They're like, oh man, it must be because of fraud or something like that they're backing out. And that's really not going to be the case here. So while some would have concerns over any time a CFO leaves here, I think it's more of Mr. Mao maybe not wanting to stay with the company after they made this pivot to the digital asset treasury. Could be another opportunity. There's many reasons why this sort of thing happens, but I don't think that there's anything necessarily sketchy with this. Now, one of the reasons that give me confidence is not just faith in Tom Lee, because I think you need more than that. The bottom line is, with what they're doing on the blockchain, you can see through a number of wallets, there's people that track this, where and when and how Bitmine is buying Ethereum. And so, like, I'm not sure, since it's a public ledger, you can see exactly what's happening right then. They do disclosures every single month. They're audited like any other firm as well. So there's not really anything where there could be anything sketchy at all. Like, they're not like reporting massive revenue from an influx of X, Y, and Z that doesn't really exist. That's not Bitmine. So this case as well, I have absolutely no concerns. And if you guys have been following me for a while, you know that even the companies that I'm most bullish on and excited about, if I see something that I don't think is quite right and doesn't pass a sniff test, I do call it out. Now, the last thing I want us to look at real quick is just an update as far as where they're at for their holdings. Now, of course, they reported on Monday like they always do. And we can see just here again, let me close that on this chart. Yeah, more accumulation as well. Bitmine continues to accumulate while most of the others just remain flat. And I think they'll continue to do that until they hit that 5%. One other thing, too, we've talked about this in the past. Look at the trading volume. It's looking really good. We look at percent base, maybe a little bit less percent, but it's always right around that 90% mark, which you'd love to see as Bitmine as well. They benefit from that since they are selling. And of course, you can see that fully diluted MNAV. Now, this is going to look absolutely terrible when Bitmine does pass that 50 billion share, because fully diluted includes the total maximum authorized shares of what they could possibly be as well. So just keep that in mind. This would be the better measure in that scenario as well, though it's very close to each in this case. So, yeah, regardless, there you have it. I don't think either of the SEC filings are a cause for concern. I do encourage you, if you're an investor, be sure to check those out. You can go on the SEC's website. You can use a fiscal AI tool as well and be able to get you right there. You can also ask questions and interact with it right there with their AI that's built in. Anyway, thank you guys for watching, commenting, and subscribing. Let me know if you think any differently with either the CFO or the 50 billion shares, and which caught you most by surprise. As always, thank you for watching, commenting, and subscribing. Till next time, happy investing.